Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And today, a little bit of a doldrum week as far as pricing goes. Don't you think, Rob?
I do. I mean, we had a little of excitement in anticipation of the CPI numbers that came out, and then they came out, and boy, the markets fell.
Yeah, well, yesterday was a big fall day on Tuesday.
Yeah. So here we are. The overall market since the beginning of the year, they've all fallen anywhere from 25 to 50+%. The one thing that has held up, even though it is down 5%, is gold.
Right.
Gold looks very strong, and we are approaching that magic number that you and I talked about months ago for the second time, around 1680, 1675. We're getting very close to that number again, and let's see if it holds. I think it might.
Yeah, we'll see if it remains in the sideways trading range, right? Which there's no reason it does or does not. It's going to do what it's going to do, and we'll see if the bulls are stepping in here. We did 2 weeks ago actually hit 1687.
Okay.
So we did have a little bit of an intraday dip. This is when I was out of the office, had a little intraday dip, and we're back up sitting in the low 1700s now.
No, we're at 1690.
Oh, did we actually break down while I was at lunch today? There you go.
Yeah.
So gold does seem to be pushing back down a little bit, which is expected given the way the equities market went. And like you mentioned, CPI and the dollar having just continued strength, at least on the international scale. Last week, we took a pretty specific time frame because it had to do with the last time the U.S. dollar hit a certain level on the international market, and that would have been 2002. So we're at a 20-year quote-unquote high in the value of the U.S. dollar, at least internationally. And then we kind of compared that to, okay, well, here domestically, how has inflation actually affected us, looking at rising oil prices and gold and the equities market, and very clear winner being gold over a 20-year time period since the last time the dollar hit this 109 level on the DXY. So we're seeing a very strong dollar here, at least internationally, but it doesn't feel like we're seeing a strong dollar here domestically. So what do you think is accounting for that other than the increase of money supply over the last couple of years?
There's just a lot of recklessness in both our fiscal and monetary policy over the last few years, and that is going to come back to haunt us. I think that in Europe, with what's happening between Russia and Ukraine and the energy crisis that is developing, I think Europe is in huge trouble for heating their homes this winter. I think that the dollar remains the healthiest horse in the glue factory. I know that Japan is in real trouble. Germany is in real trouble. Australia is struggling. And you pointed out earlier that 30% of China's GDP is in real estate.
Right.
I don't think that's going well. So we have a lot of turmoil internationally. And then the question remains, what happens in the Middle East? Could that set off something if Israel and Iran start squaring off? So there's any number of things that could push the dollar higher as the rest of the world continues to struggle with whatever it is they're struggling with, whether it's bad policy like what we're seeing here domestically, or sanctions and Russia fighting back versus the EU. There's just so much instability, Miles. The dollar, I think, will remain strong, but so will gold.
Sure. Well, I mean, the three biggest economies in the world, U.S., Europe, China. And I don't think in that order. I think China is actually number two, not number three. So China v. Taiwan, China v. their own real estate market, which is something I know a lot of economists are looking at very closely. Obviously, as you mentioned, what's going on in Europe, the Ukraine-Russia situation, and then they have faced a similar problem that we do just with the rampant inflation that took place during the COVID era and coming to terms with what the long-term backlash is for something like that, like we are. I ask you this question because you brought something up when we were talking earlier, and that's something that you remember seeing on TV here, I think recently you said, that we're seeing a unavailability of U.S. dollars in the global market. Liquidity in U.S. dollars has diminished internationally, which
has to be from demand.
Yeah, exactly. Yeah, which causes me to think exactly that. It has to be from demand, a need to feel liquid and in something that's providing at least some semblance of security in short-term treasury bills, but maybe not so much in long-term government bonds, because we're seeing an interesting dynamic play out between short-term and long-term interest rates.
We are, and the long-term bondholders know that Powell cannot continue to push interest rates higher, not only at this current pace, but any further. They can't get close to double-digit interest rates numbers because the debt at over 30 trillion, it's unsustainable. It would consume way too much of the current budget to push rates too much higher. So the long bond holders are holding steady. Those rates are not going up in sync with short-term treasuries. We're only 5 basis points away from the yield on the 10-year treasury versus the 30-year treasury. I think that Wall Street is anticipating the Fed at probably first or second quarter 23 to perhaps stop raising rates or maybe even pivot, because they are already pushing the real estate market down. Stocks are responding hugely negatively here this week. And now we're faced with a transportation rail strike. The transports are off another 3.5% just today. So Powell is going to push his policy until he breaks something in the economy. That's the common thread that you'll read in the financial press.
Is he going to push his policy after he breaks something? I think is the question. I think back to when I was starting my career, Greenspan was doing the same thing. In fact, Greenspan was doing it much less aggressively than Powell is. But the instant the market began to break, those interest rates went all the way down to zero in a single day.
Right.
Volcker pushed through the pain.
He did, but he wasn't faced with a $30 trillion debt either.
Yeah, that's fair.
His debt was, around $1 trillion?
And was also a much smaller percentage of annual GDP compared to the interest rate payment.
Yeah, so you're pushing this economy. If you're Powell, you're pushing an economy down by raising interest rates. He hasn't really done much to offset the huge increase in the balance sheet. He hasn't really done much to drop M2 or M3. I mean, they flatlined. So the balance sheet, M2 and M3 money supply have flatlined. So there's no real reduction there. He's just pushing up on interest rates, causing the equities market and the real estate market to suffer. He can't go much further. There's just no way to go.
Right.
I think probably what we're going to see is a reversal of policy. I mean, it's like Mike Tyson said all those years ago, everybody's got a plan till they get hit in the mouth. We're coming to the end of the tough talk from the Fed, in my opinion.
What do you think will be the event that capitulates something like that?
Boy,
I mean,
isn't that the question?
And will it be something here domestic in the U.S. market? Because I almost feel like the thing that's keeping us afloat, everybody talks about the reason people are looking at the U.S. dollar is because it's the life raft with the least amount of holes in it.
Yeah.
But what if it's not? What if the only reason that it seems that way is because it is the problems internationally that are actually the tide that's pushing the dollar up? We have our own domestic problems.
But they're not like Asia or
But they're
Europe.
not like China. It's not Europe. It's not the Middle East. And it's actually money coming in from those places.
Yeah.
Them feeling their own suffering prior to us feeling ours. And
much worse than ours.
Correct. Currently much worse than ours.
But when he continues to raise rates and pushes equities and real estate down, it also affects government revenue, which we need to pay the interest on this national debt of ours and to pay for all these extravagant programs. So we are going to see Powell push this for another quarter at least, but revenues are going to start tailing off. It's a no-win situation for him.
Right. Okay, so we're gold firm, right?
Right.
And no good gold buyer worth their salt or listener, anybody who's taking the time to listen to a show like this, you're caught up on your Ayn Rand analogies. So forgive me for bringing one out for the like two people in the audience that probably haven't read it, because I know you all have. Creature from Jekyll Island, Griffin's book, and then a bunch of Ayn Rand, and we're all in the same little microcosm. Powell pushing these interest rates further, you and I understand the need for the austerity of it, but it's very difficult to balance pushing interest rates further for the sake of allowing the markets to cool off, forcing us into a controlled recession. This is the other side of Keynesian economics we don't see very often, but it is part of it. You're supposed to control, you're supposed to slowly allow things to rise and try to slowly allow things to fall. The problem is that we have, instead of using Keynesian economics correctly as a tool to kind of cool off the big explosive moves up, we've actually maximized the explosive moves up as much as possible. And there's a whole political discussion you can have about why they allow that to happen. But there's also this expectation on the flip side, you're supposed to be able to cool off the recessionary side. So he is walking this tightrope, but it doesn't seem like the federal government is really playing ball, because we're also talking about increased spending plans and all sorts of other things. And with a damaging recessionary economy, you assume that GDP is probably going to go down. And you assume that, say, tax income for the federal government is going to go down. And you know that they're also talking about raising these additional spending packages. But they haven't really talked about significant tax increases that would cover those expenses to the full extent. So obviously there's a windfall in there that inflation has to cover.
Or the 80+ thousand IRS agents that they are
exactly
mobilizing.
Right. And those people all get paychecks too, and it's tax dollars and inflation that pay their paychecks. So I don't have anything negative to say about Powell. He's already got enough on his back right now. And to make my Ayn Rand analogy, how far across the tightrope do you think we are? Do we think we're looking at being the event that capitulates it? Maybe it's international. Maybe it's a domestic stock market break that starts hitting some sort of level that causes margin calls, like back in 2008. We don't know. I just don't know if Atlas shrugs or not when he's standing on the tightrope.
Well, looking at the big institutional money, they are very heavy gold, very long bonds.
That's a good point.
They are holding pat. This is not the short-term money. I want to say the big banks and insurance companies are long, about 117,000 contracts versus the hot money hedge fund guys that are short
30, maybe.
I think the COT report shows them in the high teens. They're short in the high teens versus significant hedge by the big money. So I think the big money is sitting in gold and bonds and cash. Now, obviously heavy in equities as well, but that's all I'm looking at for them. I don't think there's an event here in the United States that's going to cause Atlas to shrug. I think it's coming from Asia, the Mideast, or Europe. Poor Europe, they're in dire straits as far as being able to heat their homes. I know in Switzerland, the government is encouraging citizens to report their neighbors if they're overheating their homes or misusing energy.
That's a different kind of red scare.
I know. And Germany, I feel so bad for the people in Europe. And they were warned that getting a deal from Russia was going to come back to haunt them, and it did. Trump warned them. It's happened. They were poo-pooing Trump, and now, once again, love him or hate him, he said it right. And we're going into a winter that I think is going to be the worst winter that Europe has faced in decades as far as just living. And then you don't know what Russia's going to do in Ukraine. They just got pushed out of the Donbass region, some of their best troops. What are they going to do about that? Are they going to just take a deep breath and say, hey, we got beat? Or are they going to come back with something far worse than what they started with? And then you still have Israel and Iran. Israel walked away from the table this week saying Iran is not dealing credibly. Any deal is off. Now what? Japan is fiscally in trouble. China. We already know there's a food shortage. I remember back in the day when people would tell me that China is only a bowl of rice away from a revolution. The price of a bowl of rice is what controls the people in China. Now, I think that's oversimplistic, but there's some truth to that. Where is it going to break? I don't think it's going to break in the U.S. I think it's going to break somewhere else. It just makes me sad, Miles. This is not a time of tranquility and normalcy. There's way too many issues, whether it's socially, politically, economically, that are unstable. It's a very, very unstable time. But we know where our trust is, so it's not in our gold and silver. We have a higher power that we keep our trust in. But in the same time, I think many of us are wanting to do something to help. I know Don and Molly McElvaney are out in Asia with 11 different orphanages that they love, these children, that they run around to different countries and support. I think there's a real need in the world for people like the McElvaneys doing what they do.
Well, I appreciate it, Rob. I agree with you. Why is gold up on any given day, or the Dow up on any given day, or what's the dollar doing? Or, I know we can get fixated on not just a single tree, but leaves on the tree. And when you take a moment to kind of step back and take a look at the bigger picture, it does sort of feel like the ball's sitting on the ground and the play clock is counting down, and there's going to be a snap sooner or later. I don't know a lot of people who are sitting in a situation right now thinking, oh, we're just waiting for everything to get back to normal. It does feel like there's a new paradigm, a new normal coming, which comes from time to time. This shouldn't be something you can overly prepare for. It's not something you can overly expect. It's not something that you know exactly when it's going to happen. It always happens faster than you think it's going to. And then you look backwards wondering if it's going to keep happening when it's already over.
Well, nobody wants things to get back to normal more than me. I would love if we could roll the clock back a few years and just take a deep breath and say, wow, life is good.
Yeah. Remember 2018?
Yeah.
2018 wasn't too bad.
Yeah.
So I guess that is going to do it this week on a different sort of Golden Rule Radio, in a week where you and I were chatting before recording because Tori and Robert are both out. So I appreciate you joining me this week. And I was looking at charts and you said, what are we going to talk about today? And I've just got 3 or 4 different charts pulled up in front of me and said, I have no idea. I think there's a bigger discussion to be had than zooming in on a day-to-day or week-to-week, or it moved this percentage, because there is a bigger event at play that these are all pieces within. And I think there's some genuine concern out there for what the world is going to look like 18 months from now. And it doesn't have to be significantly worse. I think Jerome Powell and me and everyone else included, if you really are honest with yourself, gradually worse really is kind of better than immediately worse.
I agree.
And Powell knows that. He knows exactly what tightrope he's walking. I just don't know if Atlas shrugs or not. And that's the part that makes me concerned, and I've been concerned for months. Is he Volcker or is he Greenspan? And if he's Volcker, he's a lot better Volcker, because it's a lot bigger debt he's dealing with and a lot narrower tightrope that he's having to walk. And I just don't know. So as I'm now saying for the second time, that'll do it this week for Golden Rule Radio. If you liked what you heard, do the YouTube things. It does help us out. If you'd like to talk with Rob or myself or anyone else here at McElvaney ICA, we can be reached at 800-525-9556. You can find us on Twitter at ICA Gold or Facebook at McElvaney Financial. As always, we wish you the best with your own personal portfolio decisions. And if there's anything we can do to help, please give us a call.
Y'all have a good week.